What if central bankers are not scientists at all? What if they are more like generals fighting invisible wars? You hear about interest rates on the news. You hear about inflation. You hear about balance sheets. You hear about emergency programs. But those boring terms decide your mortgage, your savings, and your future. When crisis hits, central banks do not follow one perfect formula. They improvise, they adapt, they make trade-offs under pressure. And that is the brutal truth of this book. If you click away now, you will keep thinking monetary policy is just technical jargon. You will miss the real battle shaping the economy around you. In this video, I will give you 3 exact frameworks from this book. You will learn why monetary policy is more art than science. You will understand how central banks reacted to the 2008 crisis and COVID-19. You will see why flexibility matters more than rigid rules. By the end, you will understand the tools central banks actually use. You will stop thinking interest rates are the whole story, and you will understand why policy mistakes can echo for years. This is not a textbook of equations. This is a guide to surviving economic war. The book we are breaking down today is The Art of Monetary Policy. It was written by Kristen Forbes. She is a professor of management and global economics at MIT Sloan. Why should you listen to her? Because she studies macroeconomics, central banks, and financial crises at the highest level. This book draws lessons from Sun Tzu's The Art of War. That is not just a cool reference. It is the book's entire structure. Forbes argues that monetary policy is about preparing for shocks, staying flexible, and choosing the right tools for the moment. She focuses on what central banks did during the last 2 decades, and she asks what they should do next. The first major idea is that central banks must plan before the crisis arrives. That sounds obvious. It is not. Most people assume policy starts when panic starts. Forbes says the smart move is preparation during calm periods. That means studying weak spots. That means building tools early. That means knowing what to do before the fire starts. Sun Tzu's logic is simple. Win the next battle before it begins. In monetary policy, that means making sure rates, balance sheets, and emergency programs can be deployed quickly. My honest take? This is the book's strongest point. Preparation is boring, but in a crisis, boring preparation looks like genius. The second major idea is that shocks are inevitable. That is a huge part of the book. COVID happened. The financial crisis happened. Future shocks will happen too. Forbes argues central banks should accept that reality instead of pretending stability is normal forever. That matters because rigid systems break. Flexible systems survive. A central bank needs several tools, not just one: interest rates, balance sheets, emergency support, forward guidance, macroprudential policy. Each one does a different job. The point is not to worship one instrument. The point is to have options when conditions change. That is a very practical lesson, and it explains why modern central banking became so much more complex after 2008 and 2020. The third major idea is that trade-offs matter more than slogans. This is where the book gets serious. Every policy tool helps one thing and hurts another. Lower rates can support demand, but they can also create side effects. Balance sheet expansion can stabilize markets, but it can also raise long-term concerns. Forward guidance can calm expectations, but it can also lock policymakers in. Forbes insists that central banks must think beyond the immediate fix. They need to ask what happens later. That long-term view is the difference between clever intervention and reckless intervention. My honest take? This is where the art part really matters. Good policy is not pure math. It is judgment under pressure, and judgment is messy. The best thing about this book is its realism. It respects complexity instead of pretending central banking is simple. It also gives readers a smarter way to think about policy tools. The flaw? It is specialized. This is not a casual finance book. It is more useful if you already care about central banking, inflation, or crisis response. Some readers may also want stronger conclusions and more storytelling. Who is this book for? If you want to understand how central banks actually think, read it. If you wish to care about crisis policy, read it. If you want a strategic view of monetary policy, read it. Here are 3 zero-cost steps to take tomorrow. Step 1. Stop treating central banks like they have one magic lever. They use multiple tools for different problems. Step 2. When you hear policy news, ask what trade-off is being accepted. Short-term stability often has long-term costs. Step 3. Read one crisis-era policy decision and identify the 3 tools behind it. That will teach you more than slogans ever will. If you want the free PDF summary, check the description. If this video helped, buy me a coffee and subscribe.